Hey guys, how's it going? Value Venture Investing here today. Holy man, I was not expecting this with Tesla. Just like my video yesterday with Apple, I wasn't really expecting results that good, and I was not expecting to see what I saw today with Tesla. Taking a look at the stock, it's up as of recording this over 68. Yes, that's right, $68 a share after market. And you have to keep in mind, this is after the stock has just been on a complete tear. It's nearing 650. So as you guys know, I do still have a position in it that I initially entered in around the 420 tweet, but we'll talk a little bit about that after. So I'm going to give you a quick summary of the earnings, the important points, and then we're going to quickly go through their report that they reported, and then I'm going to give you my thoughts at the end. So just on the top line here, we saw a pretty significant beat. These numbers are actually getting pretty significant. Revenue estimate was about $7 billion, $6.99 billion. And we saw them come in at $7.4 billion. So that's up 2% year over year. I like to look at it on a year over year basis. And of course, that's what most analysts do as well. So that's a little bit of a beat there. EPS, of course, is what analysts and investors have been very concerned with. Profitability. The estimate was $1.72 a share, and we saw $2.14 per share. So that's a huge beat there in terms of the EPS. And again, that's up 7% year over year. Gross margin, this is something that I would follow very closely. It's actually fallen a little bit this quarter, but the estimate was only around 18.83%, and we saw 18.8%. I believe last quarter it was 18.9%. We'll get into the reasons why I think that's the case and why I think the stock's up so much, of course. And cash, I put this here because this is something very significant that I've always been concerned with, especially with the amount of debt that Tesla has. They keep increasing their cash balance, which is very nice to see. It's at $6.3 billion right now. So we're not going to get too in depth because I find that Tesla's financials that they release are a little bit confusing with the the difference between they have GAAP and non-GAAP. They show a lot of information, what's good, but they can get a little bit confusing. So let's take a look at them right now, and I'll give you my thoughts. So starting with the highlights here, cash increased by $930 million, like I said, to $6.3 billion in Q4. They're also saying $1 billion in operating cash flow, less CapEx, free cash flow in Q4. So that's always great to see. I love to see that positive free cash flow. Profitability was $359 million in GAAP operating income, 4.9% operating margin in Q4. And 105 million GAAP net income, and then they got three, like I said here, the little confusion between the two, the 386 million non-GAAP income. So I would like to look at that as GAAP is what I'm concerned with, so still positive over $100 million. In terms of operations, I think this is what's probably driving the stock up so much. Model Y production ramp started in January 2020, ahead of schedule. Increased Model Y all-wheel drive EPA range to 350 miles from 280 miles. Record vehicle deliveries of 112,000 vehicles over that in Q4, and record Q4 storage deployment of 530 megawatt hours and 26% solar growth quarter over quarter. So I think those are the big points right there that are driving the stock. Probably the biggest one being on the top, Model Y, because that's probably going to outsell a lot of the other ones possibly combined. And also increasing that EPA range, again, is going to be key because that's just blowing the competitors out of the water. And again, maybe I put the third one as number 2 because they're always looking at vehicle deliveries. We've seen a huge increase in vehicle deliveries, so that's been very, very great to see. To read out the summary here quickly for you guys, Tesla said 2019 was a turning point for Tesla. We demonstrated strong organic demand for Model 3, returned to GAAP profitability, and generated $1.1 billion of free cash flow for the year. We achieved strong cash generation through persistent cost control across the business. Our pace of execution has also improved significantly, as we have incorporated many learnings from our experience launching Model 3 in the United States, As a result, we are able to start Model 3 production in Gigafactory Shanghai in less than 10 months. Of course, we talked about that. From breaking ground, and have already begun the production ramp for the Model 3, or Model Y rather, in Fremont. None of this would have been possible without strong demand for our products. For most of 2019, nearly all orders came from new buyers that did not hold a prior reservation, demonstrating significant reach beyond those who showed early interest. Amazingly, this was accomplished without any spend on advertising. That is pretty impressive. As more people drive our cars and the industry rapidly validates electrification, interest in our products will continue to grow. Higher volumes driven by Model Y and Gigafactory Shanghai, continued improvements in operating leverage, and further cost efficiencies should allow Tesla to ultimately reach an industry-leading operating margin. So that was a really good thing to read there. The fact that they're not even advertising, I really like that organic growth with no buyers as well. So that in itself is a pretty good summary why the stock's up, but we're going to continue on here. So let's take a quick look at their financial summary. We won't go too much into detail on this, but we can see here the automotive revenues quarter over quarter. Fourth quarter of 2019, if you're wondering why I'm looking here, this is highlighted in red all the way down, so about 6.3, a little over $6.3 billion. That was up, big quarter over quarter, but year over year, it was only up 1%. Pretty small proportion of that was regulatory credits, but that was, has increased significantly, 40% year over year. So they don't break out the other aspects of their business here, but they do down below. So this is kind of what makes their statements here a little bit confusing, but you can still see the total revenues, like we said, were about $7.4 billion quarter over quarter. That's up 17%, but year over year, it's 2%. Going down to the bottom here, we can see the net loss attributable to common shareholders, and this is non-GAAP, right? We have GAAP above it was 386, and like I said, above it there is 105 million, and we can see the increases quarter over quarter and year over year. What investors are probably most interested in is the EPS. So let's look at the EPS attributable to common stockholders. Basic GAAP is 58 cents per share, and of course, what we reported before was $2.14, but that's non-GAAP. So keep that in mind as well. Heading down to their financial summary, what they're talking about revenue here, they're saying in 2019, our revenue growth was positively impacted by strong increase in vehicle deliveries. Revenue growth was offset by higher lease mix and Model 3 becoming a larger part of our mix. Introduction of the standard range trims of the Model 3 and adjustments to the vehicle pricing. These changes have resulted in a reduction to the average selling price relative to 2018. Well, I expected that as well. We do not expect ASP to change significantly in the near term, which means volume growth and revenue growth should correlate more closely this year. And I tend to agree with that because we've seen, the huge ramp in Model 3, and a lot of that is lower margin. But now we're going to go into the Model Y and, the truck and stuff like that. So that is definitely some positives going forward, although we're going to see competition increase, although I was one, who would be arguing for competition probably years ago, it really hasn't caught up to Tesla. So they're also saying we are positioned to accelerate our revenue growth further through increasing build rates in Gigafactory Shanghai and our Model Y production in Fremont. And these production increases will allow for higher total vehicle deliveries and associated revenue. I won't go into profitability here. You guys can, pause the screen here if you want to read it. They're talking a little bit about a stock-based compensation to Elon for the company becoming profitable. But we've already kind of talked about this down below here. Cash, again, we said cash increased by $930 million to $6.3 billion. It's always interesting to look at the actual, I'll call it product mix here. We have the Model S, the Model 3. It continues on down below here. So of course we've seen the Model S and X production drop significantly last quarter, or this quarter that just passed rather. It was almost 18,000 units there, but that was a drop of 29% year over year. But of course they're focusing more on the Model 3, which was almost 87,000. That's pretty crazy. That's 42% year over year, and it's up 9% quarter over quarter. Another area that I found very interesting that I was not very knowledgeable on, but I know a lot of other people were very bullish on, was the solar. And we can see that the solar deployed here has increased to 530, and that's up 136% year over year. That's some pretty significant growth there. We also see that store and service locations have increased by 13% year over year, and mobile service fleet has increased by 81%. The thing that I'm very interested in, because I think that this gives Tesla a huge competitive advantage, is the supercharger stations, and I'd love to see that grow 28% year over year. We have 1,821 now. That's even up 10% over last quarter. So like I said before in my other videos, if you watch them, I think that's one of the things that a lot of the competitors are not getting right, that they just really can't match with Tesla right now. So to see them continue to focus on building that out, building that infrastructure out, I think that that's critical, and that's something that should be watched pretty closely. So now we're talking about the vehicle capacity. So we're talking about Fremont here, still in California. Tesla is saying the production ramp of the Model Y again started in January 2020, together with a Model 3. Our combined installed production capacity for these vehicles is now 400,000 units per year. Again, that high volume is what investors are looking for. The ramp of the Model Y will be gradual, as we will be adding additional machinery in various production shops after such expansions are done by mid-2020. So we're looking at mid-2020, installed combined Model 3 and Model Y capacity should reach 500,000 units. So that's something extremely key to focus on right there. Something that Wall Street has been looking at significantly. To see that, 500,000 unit milestone, they're saying by mid-2020, I think that's one of the reasons that the stock is being, on a tear after hours here, and why it's been on a tear up until earnings here as well. And even more, positive, they're going to say that they're going to start to deliver the Model 3 vehicle or Model Y vehicles by the end of Q1 2020. So that's not too far away. Talking about Shanghai here, I won't read the whole thing, but I would indicate to you to read it if you can. They're saying that their goal is to further increase capacity, even further in their existing facilities in Shanghai, which to me, infers a huge amount of demand. And another great thing to hear is their Berlin factory here. They're saying we're moving forward with our preparations near Berlin, which we have selected as the right place to build vehicles for the European market due to a strong manufacturing and engineering presence in Germany. The first deliveries from this factory are expected in 2021, so that's actually not too far away either. We have a chart here. We've also got some another chart, I guess, if you will, up top here. You take a look, pause your screen if you want to take a look at those. It's very interesting information. Talking about the core technology, if you're not aware of this, take a look at this stuff. Vehicle software, I wasn't even aware that they were charging $9.99 for this new vehicle software service. So take a read through that. And the battery and powertrain, we spoke about this already, increasing the maximum EPA range from 315 from 280 miles. And of course, they always like to compare their energy efficiency to the vehicles, and it's very their energy capacity on these batteries and their battery technology is very impressive. Very impressive. Again, here we're talking about other highlights of their energy business. I'm no expert in this, not that I'm an expert in Tesla anyway, but if you want, take a look at this. It's very interesting to see the growth in terms of deployment. Take a look at this chart here from 2015 to 2019. The growth has been quite phenomenal, and a lot of people think that could be a huge portion of their business. Now, the outlook going forward, this is again another very important if you're aware of investing at all. It's all about future expectations. Going forward, volume for the full year of 2020, vehicle delivery should comfortably exceed 500,000 units. And like I said, that's a key thing that is being focused on right now. Due to the ramp of the Model 3 in Shanghai and the Model Y in Fremont, production will likely outpace deliveries this year. Both solar and storage deployment should grow at least 50% in 2020. And again, like we saw up top there, the growth has been phenomenal in that business. Cash flow, they're saying here that they should be, they should expect quarterly free cash flow going forward being positive, due to certain exceptions, not all the time, but that's to be expected. Again, profitability goes along with that. They're saying that they're going to be seeing net income gap positive going forward, again with the possibility of temporary exceptions. and particularly around the launch of the ramp of new products. Like, so you see the truck and the semi and stuff like that, and the roadster, you're going to see some turbulent activity in terms of profitability there. Production ramp, like we said, Model Y in Fremont has begun ahead of schedule. Model 3 production in Shanghai is continuing to ramp, while Model Y production in Shanghai will begin in 2021. We are planning to produce a limited volumes of Tesla Semi this year. So that's the first mention that I've seen of the Tesla Semi. Man, they got a lot on their plate, but that'll be interesting to see for sure. Of course, we always like taking a look at photos here. They've got the Model Y body shop in Fremont. We have another side picture here as well. And this one is part of the body shop as well in Fremont. And then at the bottom here, they've kind of got a picture of the 2019 prototype and then the January 2020 production vehicle. I think this is going to be a very big seller. I mean, most people are interested in SUVs, and look how the Model 3 is actually selling, right? Here we have the layout, so you can take a look at that. It's pretty interesting as well. And then we go down into the key metrics. Now, these are quarterly metrics, again, on unaudited, but I find these very, I'm a kind of a very visual learner, hands-on learner myself. And to look at them from this perspective is very interesting to see the vehicle deliveries. Q4 is always big, but look at it, Q4 2018 to the last quarter here. Huge free cash flow, operating cash flow. They like to focus on that. And of course, net income is now being positive for the last 2 quarters. I found that this chart was quite interesting as well, because you can tell by what a company shows what they're focusing on or what they think is important. And they're showing that the Model 3 ramped to 5,000 a week at the end of Q2 2018, and they're showing right after that, you can see operating cash flow and free cash flow and vehicles all go in unison, go positive. So they're trying to really drive the point forward that with high volume that they're gonna have positive free cash flow, and they're going to become profitable. So you can see that that's something that they're very focused on there. If you want to take a look at the whole totality of it here, we have the statement of operations. I'm not going to go through all this. It's a lot. It's hard to look at in some cases because you're comparing audited to or GAAP to non-GAAP. But if you want to take a look at it, it's here as well. So again, here we've seen another company with amazing earnings. I feel like this is all I'm saying lately. Great earnings, great earnings, great earnings. Now with Tesla, you guys know that I do own a portion still. If you've been watching my videos, you know that I sold off a little bit of it. Wish I wouldn't have, but I sold a little bit of it off, and I kept what I initially bought at $420. So this position, I'm up about 65% on something right now. So I think I'm gonna hold on to it for a little bit longer because we have a lot of great stuff ahead of us. Like I've said in my other videos, we have the truck, which I think is definitely gonna drive the stock up a lot, but I'm really struggling whether I should sell some of it or if it hits somewhere around 700 or 750, if I should sell it all, because in terms of what it's actually worth, don't dislike the video, guys, but I don't think it's worth what it's trading at right now, but that doesn't necessarily mean that it's not gonna continue to go up. So that's going to be something I'm going to be grasping with. I might sell some of it off shortly here. We'll see what it does tomorrow, but I mean, it looks like it's going to just tear up tomorrow. And of course, these were phenomenal earnings and everything that I like to see. So I'd like to know what you guys think, though. Are you holding any Tesla shares? Are you thinking of getting out? What do you think of that? You think the value is reasonable at this price, or do you think it's time to take some off the table? So that's going to be it for tonight, guys, and I'll see you in the next one.